Hi traders, it's Harry here. I hope you're all keeping well. And today I'm here to talk about what you need to look out for before engaging in any trades, long or short. Okay. So this is my email address. If you've got any questions or you want to chat to me, send me an email and I'll drop my WhatsApp telephone number, and then yeah, we can talk on WhatsApp. Yeah. Okay. So I know this is a very difficult business. It's hard to make money in the financial markets, but I have been lucky to have a good understanding and the ability to read the chart um, correctly. Yeah. I've been doing this since 2007. I've blown account after account, but I kept coming because I believe that that one day, um, I will understand how this works. And thankfully, I'm here, and I can pride myself to say that I am a successful um, forex trader. Yeah, so I can say that I now understand how this works, and I just want to extend that knowledge to everyone that comes across this video that want to fully understand the Elliott wave principle. Yeah, so that's what I trade. I trade the Elliott wave principle, but in the past I've traded all of them: support and resistance zones, supply and demand. Actually, I started by trading supply and demand. My mentor, a fantastic guy, my friend, he's actually a psychiatrist, a consultant psychiatrist. He mentored so many people that you watch their videos on YouTube. Someone like Moneyball Austin, he mentored him. And his YouTube channel is called Storehouse Analytics. So you check him out. His name is Michael, or AKT, a fantastic young man, very intelligent. Like I said, he's a consultant psychiatrist. So, you can imagine how smart that gentleman is. Yeah. So he mentored me, he mentored Mike, Moneyball Austin, and so many supply and demand traders you see on YouTube. We were so many. So I started by supply and demand, and then I branched to other strategies. I tried, just like you watching this video. You've tried so many strategies. You go to from one to another one to another one to another one. Yeah, but now I stopped. This is my final bus stop. Elliott wave principle. Yeah, this is it. Elliott wave principle. So what I do is I combine Elliott wave principle and stop hunt. They do work. Yeah, stop hunt is another strategy that I fancy. I love a lot. Yeah. So with the knowledge I have with all these strategies, um, I'm comfortable using the Elliott wave principle to to get into my trades and get out. So with Elliott wave principle, you'll be able to forecast the next move. You'll be able to see the next move. Yeah, you know where the next leg would be, and also with the experience I have about supply and demand and stop hunt. I put everything together, and I smash the charts. Yeah, so I'm going to show you what to look out for before engaging, before taking any trades. Okay, so the first thing that you need to look, no matter what strategy you're using right now, you can stick with that strategy, but before you take a trade, look out for this. So combine this with your strategy if you may, if you want. Yeah, so look out for a 5-leg up that looks something like this. Yeah, we have rules for this 5 legs up in Elliott wave principle. Yeah, but what I'm going to concentrate today, I'm going to concentrate on these first 3 legs. Yeah, this will be where I will concentrate. These first 3 leg up. Yeah, so we'll label this as a 1, 2, 3, 1, 2, and 3. Okay, so the rule is that your 2 must not go below where the one started. So here, okay. So that's the rule for the 2. And this one here must have a 5 leg up. Yeah, the 5 leg up is something like this: 1, 2, 3, 4, and 5. Yeah, okay. So again, the rule is that the 2 must not go below the 1. So you have 1, 2. Yeah, the 2 must not go below the 1, and this 3 must be the longest or the largest wave, and then your 4 should not trade at it where the 1 stopped. Yeah, so where the 1 stopped, and then you have your final leg up. Yeah, so 1, 3, and 5 is your impulsive leg, and 1, 3, and 5 must contain a 5 sub leg within them. Okay, 1, 3, 5 must contain a 5 leg inside them, and then your 2 and 4 should have a 3 waves corrective pattern. Okay, so that's what. So this here is, you need to look for this here inside this one. Yeah, so once you've seen this, let's say for example you're looking at this on the 4-hour chart. If you can't clearly identify this 5 leg up here, then drop down to 1 hour or 30 minutes or even 15 minutes to see this 5 leg up. Yeah, so once you've seen that, then wait for a correction of this 5 leg up, because after every 5 leg up, for 1 you must have a correction. Yeah, for 2. Okay, so you then look for correction. Once you've seen a correction ended that did not go below the origin of this origin of the 1, yeah, then look for a bullish signal, yeah, somewhere around here, yeah, and then take a long at the break of that bullish signal, yeah, and then aim to take a profit at 3. So how to identify where to take your profits? All you need to do is take fib extension, which you can get here at Fibonacci. Yeah, the trend-based fib extension. Grab that. You measure from the origin of 1 to where the 1 ended, back to 2, and then release the fib. Yeah, and then you take your profits at 1.618. So just before 1.618, you take your profit and you're done. That's all you need to do. It's that simple. Yeah, it is that simple. Okay, so when you do this day in, day out, you're most likely to grow your account and minimize your losses. Okay, so I'm gonna show you an example an example on the Aussie cards right here. Yeah, so let's say for example you've seen this chart and you say, okay, I'm a spot and resistance trader. Let's say for example, and you spotted this zone here and you say this is my area where I've had multiple rejections. Yeah, so you had a rejection there, rejection here, rejection there, a rejection there, you have another one there, and then you have this one. Okay, so now you're saying this is my support area, I want to go long. Yeah, I want to buy. Your supply and demand trader. This is a demand zone here. This right here is a demand zone. This right here, this is a demand zone where you have this drop, base, rally. Yeah, so this is a demand zone, and you want to take a trade right at the demand zone. So what you need to do is, so let me take the 2 red lines off. Okay, let me take them out. Okay, so we identify that this is a demand zone and this is a support and resistance zone. So this is the area where you want to take a trade. Now, what I want you to look out for before taking this trade is ask yourself, if you do this every day, trust me, you will minimize your losses. Ask yourself, now price has come into this area that I want to participate in, I want to go long here. Before jumping in, ask yourself, or wait until you see a 5-leg up. Yeah, once you see a 5-leg up, then for example, I have a 1, a 2, a 3, a 4, and a 5, final leg of a 5. So remember I said that this 1, 2, 3, 4, 5, the 1, 3, and 5 must contain a 5-leg up, yeah, and the 2 contains 3-leg down, and the 3 contains 5, 4 contains 3, and your final 5-leg up must contain 5-leg up. So 1, 3, 5 must have 5-leg each. 2 and 4 are the corrective waves. They must have 3 legs down for correction. So if you look at this, yeah, you won't be able to, it's hard for you to count a 5-leg for 1 or 5-leg for 3. 3 is always, must be the longest, the largest, like you can see here. So it's hard to see, to make out 3 here, but if you go down to lower time frame, you'll be able to see it, which, you know, which we would do. Yeah, I'll do that. Let me just circle that area, and then we can drop down to lower time frame to check what I'm talking about. Yeah, so let's draw a circle here. So this is the 1. Okay, so all you need to do is label this as 1, and then you wait for the correction. Yeah, so this is the correction that you need to wait for. Let's take this out. This correction here, that said, as remember I said, it must be a 3-leg down, 3-leg up, another 3-leg down. Sorry, 1, 2, 3 basically. So here you have different corrective structures, which we won't go into today, but I'll do that another day. Yeah, so basically all you're looking for here is a 3-leg down. Okay, for example, we have this 1, 2, and 3, so this is a 3-leg down. Yeah, so after you've seen a bullish candle appear after the correction that did not go below the origin where this one started from, which is here, then after this bullish candle here, then you can take a long here, put your stop below here or below there. Yeah, and then remember I said you aim to take a profit at 1.618. And how do you do that? Again, you grab your fib extension. Yeah, your trend based fib extension right there. You start from the origin of 1. Where did 1 start from? Where did it start? It started from here. Yeah, you drag that to where the 1 completed, yeah, which is here, and then down to your 2, where the 2 finished, and then you aim to take a profit at 1.618, just before 1.618 here. Yeah, that is simple. That is simple. As you can see, this extended a little bit for 3, so you had your 1 there, your 2, and then your 3 here. Yeah, and then we've got our 4 here, and then we're, 5 is in play. So like I said, we'll come back to do a 3, 4, and 5 legs, but the 1 and 2 is something that I want to show you first. Yeah, so once you have identified this leg, and then the 2, you're sure that this is a 2, you're comfortable that this is a 2, then take a long trade. Take a long trade here after a bullish candle. Put your stop below the 2 or below the origin of 1, and then you aim for 3. So normally you get like 3 to 1, sometimes 4 to 1. This is so simple. It's so simple. It's not difficult. All right. So what we need to do now is let's drop down to a lower time frame just to check out the 5-leg up for 1, so that I'll show you the what I'm talking about in terms of the 5s. Yeah, number 1 containing 5-leg, 3 containing 5-leg, and then your 5 containing 5-leg also. All right, So let me zoom this for you for clarity's sake. I hope it's clear. It's clear here, but I'm not sure if it's clear enough. Okay, so now you can see that we have a 1, a 2, a 3, a 4, and a 5 for leg 1. Yeah, so we label this as, where is my thingy? Where are we? Okay, I need to put my glasses on now. Okay, so let me label 1, 2, 3, 4, and 5. Okay, so we can count a 1, a 2. Remember, I said the 3. Your 3 is always the largest, the impulsive leg to the upside. Yeah. So so once you identify your 1, then you need your 2. Okay. All right. So we have your 1, your 2, and then you have a 3 and a 4 and then a 5. Okay, so once that is identified, then all you need to do is it's up to you how you want to do it, but how I like to do it is I just put a 1 where the 1 ended. For example, I just stick a 1 there, and then you stick your 2 where your 2 ended, for example. Yeah, that's your 2. Okay, so once you get your 2, then you need to count another 5 leg up for 3, and then for 4, and then for 5. Yeah, so now you ask yourself, where is my 3? Yeah, so that's your 3 here, and this is your 4, and that is your 5. That makes 1. Yeah, so now count the 3 and the 5. Can you see a 5 leg up? Let's say for example, this is our 4. Can we see a 5 leg up? So 1, a 2, a 3, a 4, and a 5. So remember, I said the 3 is always the largest move. Yeah, so this is a 3. Can you see how big it is compared to 1 and 2, and then a 4 and a 5? Okay, now the 3, this 3 here, yeah, can you see how this 3 is also the biggest or the largest move to the upside? Yeah, can you see that? Yeah, so you had your 1, your 2, and then you had your 3, and then you have your 4, and then you have your 1, 2, your 3, 4, and then your 5. That makes it 3. Okay, so it's that simple. It's that simple. You've identified your 1 here, you've identified your 2 here, you've identified your 3 here. So all this is your 3. Can you see how 3 is the biggest of them all? Yeah, your 3 is bigger than 1, your 3 is bigger than 5. So your 3 must be the biggest one. And even on the sub legs, your 3 is also the biggest. Yeah, because this is 1, 2, and then all this is 3, this is 4, and then this is 5. So your 3 is also larger, and this 3 is also larger, and this 3 is also larger than 1 and you know 1, 4, 1, 2, 4, and 5. Yeah, so 2 and 4 are your corrective patterns. 1, 3, 5 are your impulsive legs. So we can clearly identify a 1, 2, a 3, a 4, and a 5 leg on a lower time frame. Okay, so this is our 1, and then our 2 is basically up. 2 here did not go below our origin of this 5 leg up for 1. Okay, so for you to get a 1, you need a 5 leg up. Okay, and for you to get a 2, you need a 3 leg up. So this is a 3 leg up. So you have 1, 2, 3 for A, 1, 2, 3 for B, and then another 1, 2, 3 for C. Okay, so this C leg can be a 5, but like I said, that's another video on another different day. I just want to make this brief. So this is something that you need to look out for. Let's go back to 4-hour time frame. Yeah, so once you're happy that you can identify a 5 leg up on this, if you can't see it on this time frame, just drop to lower time frame, and then you see the label is here. So this is our 1, our 2, our 3, our 4, and then our final leg 5 for our 1. Okay, and then that's our 3 leg down for 2, and then you go long at the break of this bullish candle. Yeah, so that's your signal candle, and then put your stop below your 2, and then you aim for 1.6, just before 1.618. So this is where you take a profit, somewhere here just before the 1.618. Yeah, so can you see a huge profit and a small stop loss? Yeah. All right, so this is something that I wanted to practice. You can do opposite for a short trade. It's that simple. It's very simple. All right, so if you do this every day, then trust me, you get closer to being a profitable trader. All right, so you got my email address, there. Any questions, drop me a comment, drop your comments, and trust me, I'll be glad to respond to you, because I was there. Sorry, just unlock this. Yeah, so I was there too. I struggled, but now things are different. All right, so any questions, please drop me an email or drop a comment below, and yeah, we'll talk. All right, okay, take care now, and I'll come back to do videos like this. Cheers, bye now.